All right, today we're going to go over the third checklist item in my list of 6 checklist items I look for before investing in a stock. And this one is for basically it tells you to look for a certain amount of upside before you're willing to invest. And in my particular case, I set a hurdle rate of 2 times to 3 times upside before I'll really consider an investment. And now, in your case, you may set some different hurdle rate. You might have a hurdle rate that's lower or higher. And also, I should caveat that not all of the stocks that I own currently have 2 to 3 times upside. That's the standard I'm looking for when I make the initial investment, right? Sometimes the stock sometimes it goes lower and there's more upside, or sometimes you're wrong and your expectation of the upside gets revised downward, and then you may make a decision to sell a stock at a loss. But other times you realize the upside, but there might be reasons to hang on to the stock. And I'll go through some examples of this as well. But in this video, I'm going to just go through kind of the philosophical underpinning of why you would set a hurdle rate like this before considering a stock. And then in the second part, I'll go over kind of what sorts of things to look for to try to find upside like this. Okay? So the main idea of setting a hurdle rate, just thematically, is to get you to wait for your pitch. It grooves the idea that we covered in a prior video, which is that there are no called strikes in investing. You can wait for the specific stock that comes your way that you think has sufficient upside and meets the other checklist items that you have, and such that it is worth investing, worth investigating and then investing in. And so it's to groove this no called strikes theme. And then also I want to give you a book recommendation, which is the book The Dondo Investor by Monish Pabrai. Monish Pabrai is a very well-regarded and very generous value investor. He's got lots of videos on YouTube where he shares his investing approach and his investing philosophy. He gives lots of free talks. But that book it's an excellent book because it's accessible to investors of many, many levels. Beginner to intermediate level investors can get great insights from it, but so can more advanced, sophisticated investors as well. And he has a section in that book about looking for that degree of upside, and also just talking about how it causes you to take a pass on the large majority of investments that come across your radar screen. Okay, so now let's talk about kind of what to look for. What kinds of ideas can be doubles or triples? And typically it's going to cause you to look in sectors that are deeply out of favor, or companies that are deeply out of favor, but where you have a theme or a thesis where companies may return to being in favor. And so, for example, you might look at a cyclical company during that cyclical downturn of that industry. For example, in the banking sector, after the great financial crisis, you have to realize that something like a third of the banks in the United States went out of business, but the banks that survived were the better banks typically, and they're going to have that much more market share to gobble up because a lot of their competitors went away. So you could actually invest in some very, very highly regarded banks like JP Morgan. In fact, JP Morgan actually fell out of favor yet again a couple of years after the financial crisis with the whole London whale controversy. And back in those days, you could buy the stock for a couple of years after the crisis in the low 30s or the high 20s, and you could kind of map out as the economy recovered that this company would return to profitability levels that were close to what they had earned before. And you could map out a doubling of the stock price with relative confidence. It turned out that the stock went up almost fourfold, actually. It's around 120 something now. And I actually bought some JP Morgan both before the financial crisis, but also after, because I felt that this upside was significant. And I still hold the stock. I hold most of it, even now, because it still pays a good dividend and it still has some upside, although it may not be a double from here. So what may happen is you may buy a stock, you realize this doubling or 100% increase, but you may still choose to hang on to it because there's still a dividend or there's still some reason that you think there's some more upside, just maybe not as much as there was before. Okay? So you want to think about companies that are out of favor, companies that are earning less than they normally earn, maybe because of a downturn. And ideally, you want to look at specific situations. Sometimes there's a unique situation where maybe a company has poor management, or they're under earning because the company's made some poor strategic decisions that can be reversed, for example. And also there can be special situations. If you look at, for example, the Puerto Rican fiscal crisis, it actually opened up some really good opportunities in the banking subsector in Puerto Rico. And I stumbled onto a bank called First Bank of Puerto Rico that, because of the fiscal crisis, it was just deep disfavor for any investment that had anything to do with Puerto Rico. But the bank actually had excess capital. I didn't think there was any sort of systematic risk for the company or firm risk for the company. I thought the company would survive. And most banks trade at around book value. So I felt like, okay, this is speculative, but there's a good case for a triple for this bank to go back to book value. And as it turned out, the stock, when I sort of first discovered it, was trading around $3 a share. Now it's at 10. And I've been sort of trimming back the stock lately because I don't think that there's significant upside going forward. I could be wrong about that. But when the stock was at 3 and the Puerto Rican financial fiscal crisis was happening, you knew that the news was bad then, but probably the territory would work its way through, and this bank would kind of go back to a normal existence. And you just had to have sort of little courage and some patience. And in this particular case, the company went from under-earning to a normalized earnings level. They resumed their dividend, and the company traded back towards book value. So you had a few different factors that came into play with a thesis behind an investment like this. And then I guess there's a more risky version that you can do where you can look for significant upside. And we covered this in one of the early videos. I think it was video number 8 from this series on this channel, where I talk about what I call high delta stocks. And basically when a company is at kind of sort of facing bankruptcy risk, or it has a lot of debt on its balance sheet, what happens is you can have violent movements in the equity based on whether the company's going to make it or not. And of course, this is the riskiest one because sometimes you're going to be wrong, and you really have to be able to read a balance sheet and understand kind of when the maturities of this company's debt come due and can they roll the debt. And this is sort of where a more sophisticated investor will play. But a lot of times you can find situations where a company is priced for bankruptcy or near bankruptcy, and you think there's a good argument that it won't happen. And that's a speculative investment, but it's worth taking maybe a small position. And some of those investments can go up multiple fold just because the bankruptcy risk recedes, and then people can actually value the equity as something, whereas before it was probably going to be worth almost nothing or was discounted to almost nothing by the stock market. So these are different themes to think about, and probably in future videos we'll go over other specific scenarios. But the bottom line here is you want to look for meaningful upside and take a pass on most pitches. And once an investment satisfies your hurdle rate, you can check this box and then look at the other checklist items and decide. Okay? As always, I hope these videos help, and thanks for watching.